Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine signing a multi-million-dollar contract. Not with a pen, not even just a simple digital click, but with a single intelligent action.
Right. We're talking about a system that doesn't just record a signature.
Exactly. It anticipates risks, it automates approvals, locks in terms, all driven by AI.
While others are still figuring out basic digital workflows, it's a big leap.
A huge leap. And it puts DocuSign right at the center of this evolving world where agreements are just fundamental to business.
Absolutely. They're the lifeblood.
But that brings us to the really critical question, the one many of you are probably grappling with. In this age where things like blockchain and smart contracts are starting to rewrite the rules of trust itself, can DocuSign actually pull ahead of giants like Adobe?
Can they really lead this digital agreement space?
Or is there a risk they become, well, a bit of a relic as things move towards more decentralized, maybe tamper-proof futures?
It's a fascinating tension. The established player pivoting versus the disruptive newcomer.
That's what we're going to unpack today. We'll look at the evidence, the numbers, the tech, to try and get closer to an answer that could really matter for your investment strategy. #TagI, leadership paving the way. So to really understand where any company might be heading, especially through a big shift like this, you've got to look at who's in charge. Who are the people guiding this transformation at DocuSign?
Well, at the very top, the key figure is Alan Thygesen. He became CEO in 2022.
Thygesen, okay.
And he brings this really significant background from Google. He was the one who scaled their America's advertising business to, well, over $100 billion.
Wow, okay. That's serious scale.
It absolutely is. And that experience clearly shapes his approach at DocuSign. His big move, his defining strategy, is steering the company hard toward this AI-centric intelligent agreement management platform, IAM.
IAM, right. We'll be talking a lot about that.
We will. And the 2024 launch of that platform really showcased this vision. It's about integrating AI for deep agreement analysis, for automation, moving way beyond just the electronic signature.
Expanding into that whole contract lifecycle management space.
Precisely. It's a strategic necessity, really.
Yep.
They need to differentiate themselves, and they need to position for a future where agreements are managed proactively, intelligently, not just signed and filed away.
Makes sense. But it's not just him, right? There's a whole team.
Oh, absolutely. Leadership is definitely a collective effort here. Blake Grayson, the CFO since 2023, is a prime example.
Okay.
He came from the trade desk, Amazon, places where financial planning is critical. And he's been instrumental in driving cost efficiencies at DocuSign.
How so?
Disciplined capital allocation, boosting free cash flow margins up to nearly 30% recently. That kind of financial rigor is essential to fund this ambitious IAM pivot. You need the resources.
Underpins the whole strategy.
Exactly. Then you have Paula Hansen, President and Chief Revenue Officer since just this year, 2024. She's got a strong background from SAP and Cisco.
Big enterprise names.
Right. And she's now leading the global sales and partnership efforts, really pushing the IAM rollout. They're already landing key enterprise deals, which help smooth out revenue through bundled subscriptions. Her role is turning that tech innovation into actual dollars.
Crucial. Who else is key?
Well, there's Robert Chetwani, President and GM of Growth. His experience at Atlassian and eBay is relevant here. He's focused on marketing, product-led growth, things like AI-powered workflows that make DocuSign stand out when companies are comparing options.
Getting that competitive edge.
Anwar Akram, the COO, also from Google, is optimizing operations, making sure the infrastructure can actually handle all the data IAM needs for its AI features. Scalability is key.
Can't forget the people side either.
Definitely not.
Yeah.
Jennifer Christie, the Chief People Officer, comes from Twitter and Amex. She's focused on building that culture of innovation, getting the right talent in AI and engineering. That's the fuel.
And the tech leadership.
Sagnik Nandi, the CTO, also joined in 2024 from Okta. He's driving the tech stack forward, making sure those AI integrations really position them effectively against, say, Adobe's offerings, which tend to be a bit more fragmented.
Okay, quite a lineup. And the board.
Overseeing it all is the chair, Maggie Wilderotter, a real veteran from Microsoft, P&G. She provides that essential governance oversight, and notably, there's an emphasis on the ethical use of AI in agreements.
That's becoming increasingly important.
Critically important. So this whole team's expertise in scaling tech and integrating AI, it's really shaped this strategic pivot. You see it in decisions like acquiring the IP from Clause for smart agreements. It's about blending their traditional strength with these emerging technologies.
Responding to the market.
And the competition. Now, it's worth remembering the founder, Tom Gonser, who started it all back in 2003.
Right, the e-signature pioneer.
Exactly. She actually left around 2017, isn't involved anymore. This is very much a publicly traded company run by professional management now. Thai-Gessen's Google background really speaks to that ability to monetize these digital ecosystems.
So the incentives for this team, how are they aligned with investors, with someone listening to this?
That's a crucial point. Executive compensation is heavily tied to stock performance, naturally, but also to key long-term metrics, things like revenue growth, free cash flow generation.
So they win when the company succeeds long-term.
Largely, yes. Thai-Gessen himself holds over 500,000 shares, based on recent filings. That's significant skin in the game. It reinforces his commitment to the company's success.
And the board focus.
There's a clear emphasis on shareholder returns. You saw that with the $1 billion share repurchase program in full year 2025.
Returning capital to shareholders.
Right. It aligns interests, signals confidence. Though you could argue if IAM adoption proves slow, there might be a temptation toward short-term actions rather than focusing purely on building that long-term moat against crypto disruption. It's a balance.
Always a balance. What about the company's mission, their vision?
Well, you won't find a single neat mission statement plastered everywhere, but the core focus is clear. Transforming agreements, making them intelligent, AI-powered processes that drive business efficiency.
And that comes through in their tagline, right? Analyze, sign, automate.
Exactly. Analyze agreements with AI, sign documents electronically, and automate workflows. That sums it up. Their vision is pretty expansive. They want to lead the entire $50 billion market for digital agreements.
$50 billion. That's a big number.
It is. And the strategy is to evolve beyond just being the e-signature leader into this comprehensive IAM platform provider, one that anticipates needs, mitigates risks, unlocks value, making them indispensable even as crypto technologies emerge.
A future of smart agreements.
That's the vision Thai-Gessen talks about. You see it in things like their AI-driven contract insights.
And the culture needed to support that.
They emphasize innovation, collaboration. They have these DocuSign values focused on customer obsession, agility, ethical AI use. They run internal hackathons, AI training, trying to align everyone with the strategy. Does it work? Broadly, yes. It seems supportive of the IAM pivot. They foster these cross-functional teams, specifically looking at things like integrating crypto elements preemptively. Of course, some internal reviews mention challenges, like potential silos and a remote-heavy setup.
Always challenges.
Always. But the real test of the culture is whether it enables them to out-innovate Adobe's ecosystem and effectively counter that decentralized pull from blockchain. That's the ultimate measure.
Okay, we've got the vision, we've met the leadership team. Now let's trace DocuSign's path. How did they get to this crucial juncture? Sometimes the history tells you a lot about a company's DNA, its ability to adapt.
It really does. DocuSign started way back in 2003. The founder, Tom Gonser, saw how incredibly inefficient paper-based processes were, especially for signatures.
Seems obvious now, but revolutionary then.
It really was. He launched an electronic signature platform, and it caught on pretty quickly, especially in real estate. They partnered with Zipform back in 2005.
Ah, okay. Early traction.
Early funding, about $4.6 million, helped fuel that. But a really critical moment came in 2010. They made a deliberate pivot towards enterprise solutions.
Moving upmarket.
Exactly. That allowed them to land deals with Fortune 500 companies, and it dramatically boosted revenue from around $10 million to over $100 million by 2015. A huge shift.
Then the IPO.
Right, the 2018 IPO.
Yeah.
Priced at $29 a share, valuing them at $6 billion. They timed it perfectly to capitalize on that booming demand for e-signatures.
And growth took off after that.
It certainly did. Revenue surged something like 35% annually through 2020, hitting $1.45 billion. And then, of course, COVID-19 hit.
Which just poured fuel on the fire for digital adoption.
Absolutely. It accelerated everything. Their market share in e-signatures climbed to around 70%. User base exploded to 1 billion people. An incredible period of growth.
But it couldn't last forever at that pace.
No, inevitably, things started to normalize post-pandemic. So 2021 to 2023 saw growth slow down to around 19%. And competition, especially from Adobe, really intensified.
Which led to the leadership change.
Correct.
Yeah.
That prompted bringing in Thai-Gessen in 2022 and also some strategic workforce reductions, about 10%, to refocus the company on profitability. sharpening the focus.
And that set the stage for the IAM launch.
Precisely. The 2024 launch of the Intelligent Agreement Management Platform, integrating that AI for full contract lifecycle management. That was the big strategic response.
Yeah.
Differentiating through predictive analytics, trying to set themselves apart again.
And the results so far.
Well, it drove full year 2025 revenue to nearly $3 billion, $2.98 billion to be exact. That was up 8%. Subscription revenue made up 97% of that, which is very healthy.
Strong recurring revenue base.
Very strong. And free cash flow hit $932 million, a 31% margin. Plus, metrics like 15% international growth and a really impressive 163% net retention rate show they're adapting and remaining resilient.
That net retention figure is quite high, shows existing customers are spending more.
It does. It shows stickiness. Now, the journey hasn't been without bumps. There were those aborted acquisition talks back in 2022, but their ability to reinvent themselves is pretty clear. Though, as we keep saying, crypto tech is the next big test looming.
Okay, a fascinating journey. So let's get down to the core business model. How exactly does DocuSign make money today, especially with this added AI layer? Help us understand the engine here.
At its heart, it's actually quite straightforward, which is helpful if you're looking at it as an investment. You can think of it as a digital notary public mixed with a really smart filing cabinet.
Okay, I like that analogy.
They provide the software to electronically sign documents, sure, but also to manage them securely and automate the whole agreement process, eliminating paper trails for everything from complex real estate deals to simple HR forms.
That's the core value proposition.
That's the foundation. But where it gets really interesting now is with those AI layers in the IAM platform.
Right, the intelligent part.
Exactly. It uses natural language processing to analyze contract language, looking for risks, flagging compliance issues, finding missed clauses before they become problems. It's like having GPS for your contract.
Predicting roadblocks.
Precisely. For anyone familiar with the software as a service or SaaS model, the basic structure is easy to grasp: recurring revenue, software platform. But this AI layer adds significant depth and complexity, and that ties right back to our question. Does this truly lift them above Adobe's more traditional tools?
So what makes it unique compared to, say, Adobe?
The uniqueness really lies in that intersection. They're combining their deep expertise in e-signatures, best-in-class speed, security, compliance, with this cutting-edge AI intelligence.
Bringing those two worlds together.
Right. Their passion is streamlining agreements globally, removing friction. And you see that commitment in the economics. 97% recurring subscription revenue, yielding those strong 31% free cash flow margins.
Very profitable model.
Very. And unlike Adobe's suite, which can feel a bit fragmented, DocuSign's IAM aims to create this single, cohesive, smart ecosystem just for agreements.
An integrated platform.
Exactly. We're seeing case studies, for example, with banks using IAM to cut their contract cycle times in half, automating reviews, flagging risks with AI.
How does it do that technically?
It works through a central repository. The AI pulls insights from all the documents stored there. It can automate workflows without needing complex coding, and it integrates with over 900 other applications.
Wow, 900 integrations. That creates stickiness.
Huge stickiness. That holistic approach is what really sets them apart, and it directly addresses whether they can widen that moat against crypto's self-executing contracts.
Okay, makes sense. How do they actually get this into customers' hands? What's the distribution strategy?
They use a hybrid model, which is quite effective. For smaller businesses, SMBs, they have self-serve online plans starting around $10 a month. Easy entry point.
Direct to consumer, basically.
Right. Then for larger clients, the big enterprises, they have dedicated sales teams building those deeper relationships.
High-touch sales for complex deals.
Exactly. And crucially, they have strategic partnerships with giants like Microsoft and Salesforce. That allows for deep embedded integrations right within those massive ecosystems, extends their reach dramatically.
Smart partnerships.
Very smart. They also do innovative things like product-led growth, offering free trials, providing API tools for developers so they can easily embed DocuSign features into other apps like Zoom, for instance.
Making it easy to adopt and integrate.
It really supports scalability. You saw that 15% international growth in full year 2025 that was driven by localized partnerships, and it boosts engagement. They now have 1.5 billion users globally.
Incredible reach.
It is, and their data shows about 80% retention from workflows that are integrated into other systems. It demonstrates they're outpacing competitors like Adobe, which might focus more on creative channels.
And for investors, the predictability of that revenue must be appealing.
Hugely appealing. That 97% coming from subscriptions, mostly multi-year contracts. It provides real insulation against market swings. It's like having a very reliable income stream.
Steady cash flow.
Exactly. Full year 2025 saw $2.89 billion in subscription revenue, up 8% with that stellar 163% net retention. Long-term deals with big names like Comcast really highlight this predictability. They provide steady cash flow, which is absolutely vital.
Why vital?
Because it funds the heavy investment needed for the IAM platform. It gives them the financial backbone to make these big AI bets, especially with the competitive and technological pressures we've discussed. Hashtag tag 3, products, operations, and competitive edges.
All right, we understand the journey and the business model. Now let's dive into the actual products and the operational machinery behind DocuSign. What are they building? How do they run the company? And what really gives them an edge?
Well, their flagship product, the e-signature solution, is undeniably a massive success. It's reached that huge 1.5 billion user base, enjoys a 99% satisfaction rate for secure, compliant signing.
And holds that dominant market share, around 70%.
Exactly, it's the market leader. But they're not stopping there. The 2024 launch of the Intelligent Agreement Management, or IAM, platform really broadens the scope. It uses AI to manage the entire agreement lifecycle.
Beyond just signature.
Way beyond. Features like Navigator, that's their AI search and insights tool, and Maestro, which allows for no-code automation of workflows, have driven really promising early adoption.
How promising.
About a quarter of the Fortune 500 are already trialing IAM. And it's starting to impact revenue, adding premium tiers that can lift the average revenue per user by up to 20%.
So tangible results starting to show?
Yes, early days still, but positive signs. Looking forward, their roadmap includes even deeper AI features, like predictive risk modeling, and also integrations with blockchain for hybrid smart contracts.
Proactively addressing that crypto threat.
That's the idea, preempting disruption. And while they don't offer unique financial products themselves, the $500 million they invested in IAM R&D in full year 2025 is aimed squarely at future services, like AI-optimized contract renewals, making the whole process smarter.
Positioning themselves as the AI leader in agreements.
That's the goal. Differentiating from Adobe and keeping a very close watch on that long-term crypto challenge.
Okay, what about how they run the company? Where are they based? How are they structured?
Operationally, their headquarters is in San Francisco. That's the hub for leadership, R&D, the core AI development.
Makes sense for a tech company.
Right. But they have a global presence, 18 offices worldwide, engineering hubs like Seattle, sales centers like Chicago, operations for Europe out of London, even an AI research lab in Paris they acquired from Stability AI in 2024.
Interesting acquisition, focusing on image AI.
Apparently so. Plus regional hubs in places like Tokyo for Asia-Pacific growth, Sydney. These handle region-specific sales compliance needs. It allows them to tap into global talent and meet local market requirements.
Do they own these facilities? How asset-heavy are they?
They primarily lease. No major owned assets reported. It's an asset-light approach, gives them flexibility.
And infrastructure. Cloud, I assume.
Yes, heavily reliant on cloud providers like AWS and Azure for scalability and reliability. They also outsource some customer support. It helps keep fixed costs down, while they maintain tight control over the core AI and security operations, the stuff that's central to their value.
What about vertical integration? Do they build everything themselves?
Moderately integrated. They control their core software stack, from the e-signature tech to the AI algorithms. But they do rely strategically on cloud providers like Azure for the underlying infrastructure. They actually migrated all transactions there in 2025 for better resilience.
So they pay cloud fees, but gain efficiency.
Exactly. Those fees are around 10% of operating expenses, but it offers efficiency through auto-scaling, probably outperforming competitors who might have more legacy on-premise systems. Their supply chain is almost entirely digital, minimal physical vulnerability.
Which is a big plus these days.
Huge plus. And those API partnerships, like with Salesforce, strengthen distribution without needing ownership. It's a lean approach, generally leads to faster deployments for customers. The main risk is partner risk integration, delays, things like that.
Okay, lean operations, focus on core tech. But the crucial question for investors, what truly protects them? How strong are their competitive advantages? What's the moat?
That really is the heart of the matter. And DocuSign has several compelling advantages. First, the market structure itself helps. It's effectively an oligopoly in digital agreements.
Them, Adobe, maybe HelloSign?
Pretty much. DocuSign has that 70% signature share. And while it's not a monopoly, there are significant barriers to entry. Think complex compliance certifications, HIPAA, FedRAMP, IADAS. These protect profitability. You see it in their 31% free cash flow margins.
Those certifications are hard to get.
Very. And with IAM, they're gaining share in contract lifecycle management too, up from 5% to 10%, which helped drive that 8% revenue growth last year. Now, the risk here is commoditization, especially if crypto democratizes signature somehow. But for now, the barriers are real.
Okay, market structure helps. What else?
Economies of scale are huge. With 1.5 billion users, their cost per transaction dropped 15% last year. They can leverage shared AI infrastructure, automate support, giving them a significant cost advantage over smaller players like PandaDoc. More efficient than Adobe's broader, perhaps higher overhead Creative Suite too.
Makes sense. More users, lower unit costs.
Exactly. And then there's the network effect. It's incredibly powerful here.
The classic example.
Right. More users, especially big enterprises adopting IAM, means more shared templates, more integrations, more industry-specific workflows. You see this in banking, where these shared workflows effectively lock in entire ecosystems.
Creates a virtuous cycle.
It does. That 12% user growth last year illustrates it. The more people use DocuSign, the more valuable it becomes for everyone else, widening the gap with competitors.
What about their strategy against Adobe specifically?
That's where counter-positioning comes in. They're deliberately positioning themselves as the AI native agreement hub, offering an end-to-end IAM solution that Adobe Sign, frankly, can't easily replicate without a massive R&D effort and rethinking their architecture.
Is it working?
The evidence suggests yes. Customer case studies show sales teams cutting contract cycles by 50% using IAM's intelligence. That's a tangible benefit Adobe struggles to match systemically.
And switching costs. Is it hard to leave DocuSign once you're in?
Very high switching cost. Think about migrating potentially thousands, even millions, of contracts, retraining staff, risking data loss, disrupting critical business flows. It's a massive undertaking.
Which explains that high net retention rate.
Absolutely. That 163% rate underscores the lock-in. It's probably stickier than Adobe's less integrated alternatives. Once you're deeply embedded, switching is painful and expensive.
The brand must help too.
Definitely. DocuSign is a trusted brand built on years of security, reliability. 99.99% uptime is impressive. That trust allows them to command premium pricing, like the $50 per user per month for IAM. And they're getting it, shown by that 6% average revenue per user growth, despite macro pressures.
Any unique resources they control?
Yes, what we might call cornered resources. They have over 200 patents focused on AI agreement analysis that's significant IP protection. Plus, the talent they've acquired, like through the Clause acquisition, and their ability to attract top AI engineers, especially with that Paris lab. That's a key resource.
Process advantages.
Their refined processes, like AI automated contract audits, create quality advantages that are hard to copy. They claim these yield insights 80% faster than manual methods. Fewer errors, more efficiency.
And the core tech itself.
The proprietary AI in IAM is touted as being 10 times more efficient, analyzing contracts in seconds versus hours. That positions them well against crypto's automation capabilities, which are still developing for enterprise use.
Timing seems to have been on their side too.
Absolutely perfect timing, really. E-signature rode the COVID digitization wave. IAM is launching right into the AI boom, catching two massive waves back to back.
They seem agile too.
Remarkable speed of execution. Those quarterly updates to IAM constantly raise the bar for competitors. The 2025 Azure migration, for example, optimized their operations much faster than you'd typically see from a larger player like Adobe.
Anything else adding to the moat?
Compliance is key. Meeting global standards like IADES in Europe, FedRAMP for U.S. government work, and their ongoing blockchain pilots show they're not ignoring crypto, providing specific advantages in certain industries. All these factors together build a pretty substantial competitive defense. #Tag4, growth potential and resilience amidst risks.
That's a strong case for their current advantages. Now let's shift our gaze forward. What are the main avenues for DocuSign's growth in the coming years? And crucially, what are the biggest potential hurdles or risks that could derail that growth?
DocuSign definitely has a clear, multi-pronged growth strategy, and it really revolves around expanding the reach and capability of the IAM platform.
Okay, how are they doing that?
Several ways. Market penetration is one, bundling the core e-signature with the new AI tools. We mentioned that 25% uptake in enterprises already. Then there's market development, expanding into new regions like Asia-Pacific with localized versions of IAM. That drove 15% international growth last year.
Geographic expansion.
Right. And product development, constantly enhancing the AI features, adding things like predictive analytics, making the platform smarter and stickier over time.
What about external growth? M&A, partnerships.
Yes, they're active there too. Selectively pursuing acquisitions like the Clause IP deal we talked about, and forming strategic partnerships. They also focus heavily on upselling to their existing huge customer base that actually contributed about 40% of their growth in full year 2025.
Leveraging the existing base. Makes sense. Where are the biggest opportunities?
They're pretty significant. New geographic markets, especially emerging economies, offer potential if they can tailor low-cost plans effectively. The IAM platform itself is targeting that massive $25 billion contract lifecycle management market, a huge expansion beyond just signatures.
A whole new playing field.
Absolutely. And potential future acquisitions, maybe in crypto integration, could help them proactively manage that risk. Historically, their big growth spurts, like in 2020, mirrored that broader digitization trend. Now, if IAM really takes off and accelerates growth, maybe back towards 10–15% compound annual growth rate, that would be a big win compared to the risk of stagnation.
And the products apply across many industries.
Incredibly broad applicability. Finance, HR, sales, procurement, legal. Almost any industry relies on agreements. This implies high scalability, and IAM allows for sophisticated customizations for specific industry needs, like automating procurement workflows.
You mentioned the total addressable market. The TAM is $50 billion.
Currently estimated at $50 billion, yes. Roughly half, $25 billion for e-signatures where they dominate, and the other $25 billion for contract lifecycle management and AI agreement management, which is the big growth area.
And that market itself is growing.
Projected to grow around 15% annually, potentially hitting $100 billion by 2030. DocuSign's ambition is to capture about 20% of that expanded market via IAM, up significantly from their current 6% share across the combined segments.
What will drive that growth?
Key drivers are clear. Faster IAM adoption and finding ways to monetize the AI features effectively, continued international expansion, more enterprise upselling and strategic partnerships, ongoing innovation and automation, and hopefully a broader macro recovery supporting digital transformation spending.
Okay, a clear growth path, but let's look at the flip side. How resilient is DocuSign to shocks, market changes, downturns? And what are those major risks investors need to watch?
In terms of risk and resilience, DocuSign actually shows some interesting anti-fragile characteristics, meaning certain kinds of stress can actually make them stronger. Well, look at their supply chain. It's digital, highly resilient, diversified across both Azure and AWS. No single point of failure there. That multi-cloud strategy mitigates outage risks.
Learned lessons there.
Seems so. Customer diversity is another strength. They're spread across industries. Finance is 30%, tech 25%, geographies US 70%, international 30% and growing. And company size from S&Ps right up to huge enterprises. Over 1 million customers in total. No single customer loss can cripple them.
Diversification helps weather storms.
Definitely. Now, while their current moat seems strong, we have to acknowledge the potential for erosion. AI commoditization is one risk. And as we keep mentioning, crypto smart contracts bypassing traditional signatures could become a real factor in, say, 5 to 10 years if they don't address it effectively.
But you mentioned anti-fragility.
Yes, think about COVID. That massive disruption actually boosted their adoption by 50%. It accelerated the digital shift they were already part of, strengthening them. And the IAM pivot itself is a response to market uncertainty, turning that pressure into innovation.
What about longevity? Will we still need DocuSign in 10, 20 years?
Long-term trends like AI adoption, digitization, remote work, they all favor DocuSign. IAM is well-positioned for these shifts. It seems highly probable, maybe an 80% chance, that their core services will still be needed far into the future. Agreements aren't going away, even in a crypto world.
How do they hold up in economic downturns?
That 97% recurring revenue provides a strong buffer. Though a severe recession could certainly slow growth, maybe by 5–10 percentage points, as companies tighten belts.
So what are the main risks to growth right now?
Top of the list would be intensified competition, primarily from Adobe, potential market saturation in the core e-signature space, and perhaps slower than hoped for adoption of the IAM platform despite the positive early signs.
Beyond those, any unknowns to worry about?
Well, there are known unknowns like potential regulatory changes impacting e-signature laws globally or macro inflation really squeezing corporate IT budgets. Then there are the true unknown unknowns.
The black swans.
Exactly. Maybe a sudden breakthrough makes crypto smart contracts incredibly easy to use, leading to rapid, unexpected mainstream adoption. Or perhaps a major, unforeseen AI ethics scandal hits the industry, damaging trust in platforms like IAM. Those are the harder to predict, potentially high-impact risks.
And the broader macroeconomic environment, how's that impacting them?
Rising interest rates haven't directly hurt their borrowing costs much since they're debt-free after the buybacks, but indirectly it makes customers more cautious with IT spending.
Global trade. inflation.
Trade tensions have minimal direct impact on their digital operations, but can actually help justify localized data centers, which they're doing. Inflation does squeeze their margins a bit. Operating expenses were up 5%, but they've shown they can pass costs on through pricing, raising average revenue per user by 6% because customers see value in the efficiency gains.
Any company-specific factors?
The AI talent war is real. It's increasing hiring costs as they compete for top engineers. And crypto volatility is a wild card. It could speed up disruption if it stabilizes and gains traction, or delay it if it remains chaotic. #TagV. The numbers and investor sentiment.
Okay, let's anchor this discussion in the numbers. We need to look at the financial performance and also get a sense of what the wider investment community is saying. What do the financials tell us, and what's the chatter out there about DocuSign?
Looking at the latest results from the first quarter of full year 2026 that follows their fiscal year ending in January 2025, the metrics show steady, if somewhat maturing, growth as they navigate this IAM pivot. Think of it as a reliable engine, maybe not accelerating rapidly right now, but consistently powering forward.
So what was the top-line growth?
Revenue grew 7% year over year in Q1, reaching about $750 million. That builds on the 8% growth for the full previous year, which hit $2.98 billion. This growth is coming mainly from those early IAM wins, but it's definitely tempered by the core e-signature market slowing down a bit. Shows resilient demand, though.
And profitability. Margins.
Margins have actually expanded quite nicely. Their non-GAAP operating margin hit 28% in Q1, up from 25%. That's a good indicator of how much profit they're making per dollar of revenue before certain items. It shows real cost discipline and efficiency gains, likely helped by AI automation in their own operations.
What about the Rule of 40, that benchmark for SaaS companies?
They land at 35% right now. That's the 7% growth plus the 28% margin. It signals a pretty solid product market fit for a company that's transitioning from pure high growth towards more balanced, profitable growth.
How efficiently are they using their capital, return on invested capital?
ROIC is impressive, around 25%. Simply put, for every dollar invested, they're generating 25 cents back in profit. That's very efficient, especially given the $500 million investment in IAM R&D. It's paying off in things like that, 163% net retention. Much better than the average peer ROIC, which might be closer to 15%.
What about the balance sheet? Cash, debt?
Very strong. Robust cash position of $1.2 billion and, crucially, zero debt after that $1 billion share buyback. Gives them a current ratio of 1.5, plenty of liquidity. A real financial cushion.
Debt to equity is zero then. Book value.
Zero debt to equity, yes. And book value grew a healthy 15% year over year to $1.5 billion, showing consistent value creation. Free cash flow also surged 20% in Q1 to $250 million. That cash flow is vital for reinvesting back into the business, funding that IAM bridge to future growth.
Any industry-specific metrics looking good? Billings, backlog.
Yes, billings were up 5% to $780 million. Subscription revenue, as we said, is 97% of the total. And the remaining performance obligations, basically their contracted backlog, stands at $3.5 billion, up 10%. That indicates good future revenue visibility.
How does this stack up against competitors like Adobe?
It's a mixed comparison. Adobe might have slightly higher top-line growth, around 10%, and certainly higher margins at 45%. But DocuSign generates strong free cash flow, 31% margin versus Adobe's 40%, and importantly, DocuSign has no debt.
And versus smaller players.
Against smaller competitors like HelloSign, DocuSign scale really shows. That 163% net retention absolutely dwarfs HelloSign's, maybe around 120%. Highlights the strength of their moat and customer lock-in.
What about the trend over the last few years? Growth has slowed, right?
Yes, definitely decelerated from that 35% peak in full year 2023 down to 8% in full year 2025, mainly due to that post-COVID normalization. But importantly, margins expanded significantly over that same period, from 20% up to 28%, shows maturing efficiency. And free cash flow has trended consistently upward from $500 million to $932 million. That signals sustainable profitability.
So if IAM reignites growth...
Exactly. If IAM can push that growth back into the 10-15% range, the valuation story could change significantly.
Any recent news impacting the stock?
There was that big General Services Administration deal in July, slashing e-signature prices 70% for U.S. federal agencies, could save the government over $1 billion annually and really boost DocuSign's uptake in that sector. A strategic win.
Establishes a strong government foothold.
And they did some platform maintenance in August on CLM and rooms to improve stability. No major issues reported there. Looking ahead, the next big event is the Q2 earnings release on September 4th.
What will people be watching for?
All eyes will be on IAM traction. Specifically, billings guidance will be critical, especially if there's continued softness in the macro environment. Any major enterprise IAM wins announced would be a strong positive signal. Also, any new AI regulations could potentially benefit established compliant players like DocuSign.
Okay, what about investor sentiment? What's the chatter on social media, forums?
It's pretty mixed right now, leaning slightly neutral to positive, maybe 60% neutral, 30% positive, 10% negative, filtering out the noise.
What are the main worries people express?
The biggest concern is definitely growth stagnation. You see comments like, IAM sounds good, but Q1 growth only 7%. Is Adobe winning? There are also questions about leadership execution. Can the new CRO really accelerate revenue? And that persistent crypto disruption fear. Are smart contracts going to make e-signatures obsolete?
And the positive chatter.
That focuses heavily on the AI potential. IAM is making contracts smart, huge $50 B market opportunity. And valuation comes up a lot. Trading at 15x free cash flow seems cheap compared to peers. People are noticing the enterprise adoption pilots for IAM, seeing it as differentiation from Adobe.
But still some skepticism.
Yes, definitely skepticism about the macro impact. Inflation's hitting IT budgets. Will companies keep spending on DocuSign? The overall narrative seems to be cautious optimism. People see the potential in IAM to reboot growth, but they're waiting for concrete proof in the earnings numbers. Hashtag Z sucks. Valuation and the big answer.
We've covered so much ground: leadership, history, products, competition, financials, sentiment. Now let's bring it all together. What does this actually mean for you, the individual investor, thinking about DocuSign? How should you approach its current valuation and think about its future potential?
Valuation analysis for DocuSign is really critical right now, especially as you weigh that promise of the IAM pivot against the competitive pressures and those crypto risks we've discussed. Let's try to break it down.
Okay, where does the stock stand now?
As of mid-August 2025, the stock price is hovering around $71 per share. That gives DocuSign a market cap of roughly $14.5 billion.
And the first principle here is margin of safety, right?
Absolutely crucial. Buying a stock at a significant discount to what you believe its intrinsic value is, that provides a buffer if things don't play out exactly as expected, or if the market takes a downturn. For DocuSign, buying below its estimated fair value could offer that cushion against volatility from Adobe or crypto threats.
Why does valuation matter so much here?
Because it helps separate the real long-term potential from market hype. We saw what happened when DocuSign was arguably overvalued back in 2021, peaking near $310. Conversely, if it's truly undervalued now, there could be significant upside. This analysis isn't just for investors, it guides management too on things like share buybacks.
So how do we estimate that intrinsic value? What are the approaches?
Two main ways. Intrinsic methods, like discounted cash flow or DCF modeling, where you project future cash flows and discount them back to the present. And relative valuation, where you compare DocuSign's multiples like price to earnings or enterprise value to sales to its peers.
Which is better for DocuSign?
Given their highly predictable subscription revenue, a DCF model works particularly well here.
Okay, so running a DCF, what does that suggest?
Well, if you project their full year 2026 free cash flow at around $1 billion, that's about 7% growth driven by IAM gaining traction, and then assume maybe 10% annual growth long term in a bullish scenario using a standard 10% discount rate, you get an intrinsic value somewhere in the range of $90 to $100 per share.
Interesting. So potentially undervalued compared to the current $71. What about relative valuation?
On that basis, it also looks relatively inexpensive. It's trading at about 15 times its estimated full year 2026 earnings per share, which is around $4.50. Compare that to Adobe at 30 times earnings, or the broader SaaS average around 25 times.
Significant discount there.
Yes. And its enterprise value to sales multiple is around 5 times, while peers might average 8 times. Now, we don't use crypto-specific methods since they don't hold Bitcoin, but those blockchain integrations that are piloting could potentially enhance valuation models down the line if they add significant utility. Even more complex models like Monte Carlo simulations factoring in risks like IAM underperforming still tend to suggest decent upside, maybe 25% in a base case.
That paints a fairly positive valuation picture, but we need to challenge that. What's the strongest argument against DocuSign right now? Let's steelman the bear case.
Absolutely essential to do that. From some institutional viewpoints, like Morningstar giving the core business a no moat rating, the argument is that e-signature is becoming commoditized. Growth has stalled in that 6-8% range, and Adobe's ecosystem, especially how Sign integrates with PDFs, could continue to chip away at DocuSign's share in many professional markets.
And individual investors echo this.
They do. You hear concerns about macro IT budget cuts fueled by inflation. And that looming crypto disruption is a big theme. The idea that smart contracts on Ethereum, like those IBM piloted, could just make centralized signatures redundant for many use cases. That could potentially cut DocuSign's addressable market significantly if blockchain adoption really accelerates, say 50% by 2030.
What about execution risks?
Bears point to those too. The new Chief Revenue Officer, Hansen, still needs to prove she can reignite substantial growth. Past efforts, like the 2022 layoffs, delivered only modest margin expansion compared to Adobe's much higher margins. And from a valuation perspective, even at 15 times earnings, if growth unexpectedly drops to, say, 4%, the fair value could plummet towards $50. Plus, those unknown unknowns, like harsh AI regulations, could really derail the IAM strategy, turning it into a value trap. It's a plausible negative scenario.
Okay, we've heard the bull case based on valuation and IAM potential, and we've rigorously examined the bear case centered on competition and disruption. Now, let's try to synthesize. What's the definitive answer to our big question? Can DocuSign really outpace Adobe and claim leadership, or will decentralized tech leave it behind?
It's the multi-billion-dollar question, isn't it? I believe DocuSign's pivot to the AI-driven IAM platform does meaningfully differentiate it from competitors like Adobe. It establishes a genuine pathway to leadership in this evolving digital agreement space through a more holistic, more intelligent ecosystem.
How is it truly different from Adobe Sign?
Adobe Sign is excellent within its PDF-centric world for capturing signatures, but it lacks that deep, integrated AI for managing the entire lifecycle. IAM aims to transform static documents into dynamic tools, analyzing risks automatically, automating complex workflows, providing insights through AI like Navigator. We've seen evidence it can cut contract cycles by up to 50% for early adopters.
And this edge comes from?
It stems directly from DocuSign's proprietary AI, built on that massive data set from 1.5 billion users over 2 decades. That gives them an advantage in building features that Adobe can't easily replicate without huge sustained R&D. You see quantitative proof in things like IAM contributing to that 163% net retention, showing increased value delivery to existing customers.
But the differentiation isn't absolute everywhere.
No, not everywhere. Adobe's broader Creative Cloud suite offers seamless integration for sign and media-heavy industries. That might cap DocuSign's share in niches where design and rich media workflows are dominant, but overall, if IAM continues its trajectory, this leadership potential could realistically last for, say, 5 to 7 years, fueled by that $50 billion TAM expansion and barriers like patents and network effects.
Okay, leadership potential for the medium term, but what about the longer-term crypto disruption? Is that threat overblown?
It's definitely not overblown, but it's also not an immediate death knell. Cryptographic tech, especially blockchain smart contracts on platforms like Ethereum, absolutely poses a real structural challenge. They offer automated execution without intermediaries, immutable verification.
Tamper-proof records.
Exactly.
Yeah.
DocuSign knows this. They experimented with Ethereum integration back in 2018. But widespread adoption of smart contracts could genuinely erode the need for traditional e-signatures if whole industries, like real estate perhaps, shift to decentralized ledgers. That could shrink their addressable market by 20–30% over a decade.
How would that happen practically?
Through efficiency and cost savings. Self-executing code reduces the need for manual reviews, audits, like those IBM pilots showing 90% faster agreement times. If crypto matures, gains regulatory clarity, overcomes scalability hurdles, then DocuSign's centralized model does face a risk of obsolescence in certain areas.
But DocuSign isn't just waiting for that to happen.
No, they're actively exploring hybrid approaches, piloting blockchain within IAM. The goal is to blend the intelligence of their AI with the tamper-proof security of crypto. That could actually extend their moat, creating agreements that are smart, secure, and verifiable on a blockchain.
So, pulling it all together, what are the key truths for investors?
First, agreements are fundamental to business, and there are still huge efficiency gaps to close. Second, DocuSign's data moat analyzing trillions of clauses gives them an asymmetric advantage in AI development right now, especially compared to crypto's current scalability issues. Third, for you, the investor, a key edge comes from watching IAM billings very closely in the upcoming earnings. Consistent growth above 10% would be a strong signal the moat is holding, even strengthening.
Any other hidden edges?
International underpenetration is one. Only 30% of revenue is international currently. Asia-Pacific, where digital adoption is catching up but AI demand is surging, holds massive potential. Watch partnerships there. Also, don't underestimate compliance. Many jurisdictions still require human oversight, giving DocuSign a compliance advantage over purely decentralized solutions for now.
So, the final verdict.
In essence, yes, the IAM pivot positions DocuSign strongly for leadership over the next 5+ years, leveraging AI more deeply than Adobe currently does. But crypto's disruption is a real longer-term factor that needs continuous mitigation. Hybrid innovation is the key to sustaining their advantage. I'd put the probability of success if execution remains strong at maybe 70%. For investors, the often overlooked free cash flow generation funding this innovation makes it an interesting asymmetric opportunity compared to Adobe's higher multiples or the volatility of pure crypto plays.
DocuSign is definitely navigating a fascinating high-stakes intersection of digital evolution and disruptive technology. They're placing a huge bet on AI redefining agreements, and it's a story that's far from over.
A critical transition phase.
Indeed. And for you, the individual investor, perhaps the real edge lies beyond just the company analysis.
Yeah.
It's in understanding how these evolving concepts of trust in a digital world increasingly shaped by AI and potentially decentralized systems will reshape not just contracts, but the fundamental ways businesses operate. How might your own daily interactions, the agreements you rely on, be transformed by this kind of intelligent, automated future? That's the larger, really thought-provoking question to ponder as these powerful technologies continue to unfold.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.